Hello, everyone. I'm glad to welcome you to the first series of our Go Net Zero virtual talks. While people joining us, I just wanted to tell you a little bit more about this, our new initiative, and obviously about the platform if you never participated in our webinar, and then I will pass word to our guest speakers. So, as some of you probably know, we are organizers of the Go Net Zero Energy Conference, and the next one will happen in January with our partner Repsol. However, we decided that it's not enough, and we want to provide more content for our colleagues and the people who we work with, for our attendees. So we launched Go Net Zero virtual talks, and today we have the first of this series. It's with the support of our partner, Wood Mackenzie, and today with me is Valentina Kreshma, the Vice President of Corporate Research, Wood Mackenzie. So before we start with Valentina's presentation, let me just quickly explain you how things work here. So you have chat where you can ask your questions and say hello, comment, and etc. So what I encourage you to do now, if you can just say which company and country you represent, so we know who is with us today. Then, of course, there will be some polls, and you will see as well a button hand like this, where you can, if you want to join us on the stage at the end of this event and say something or ask a question, you can do it as well, request to appear on the stage. Let's just try with the first poll now. My colleague will start it now. So let's see our audience, who are the optimists, pessimists, and realists. So do you believe we can achieve the Paris target by 2050? Definitely no chance. The next 12 months will be decisive. So I'll give you a couple of seconds for that. And I can see most of the audience believe that the next 12 months will be decisive. So some people say no chance, so it's quite as well, 30%. So don't believe in those goals and targets which major companies. We'll talk today about energy transition in the energy sector, in oil and gas, if we say it in the old-fashioned way. But we know that obviously the recent pandemic accelerated the energy transition, and a lot of European, especially European majors, announced quite ambitious programs and goals. However, not all the companies are on the same page with these pledges, and we have smaller companies, different regions. We as organizers have been running the event in different areas like Central Asia, Middle East, Europe, and I can see that it's not exactly on the top of agenda of every company like when we talk here in Europe. So that's actually what we will try to explore today with Valentina, the impact of energy transition on all the players in the sector and their upstream strategies. Valentina, the floor is yours.
Thank you, Yevnika, and it's a great pleasure to be here. So thank you for inviting me to your webinar. And I think this poll definitely provides a very good introduction into actually my first slide. So as I'm sure everyone is perfectly aware, the energy transition has dominated the conversation, especially in the oil and gas sector, but in other sectors as well over the past few years. But before we get into the strategies and delve a bit deeper into this, let's look into the some of the. Can we share the slides here?
Sure.
Yeah.
I'll start it now.
Yes. Let's look into the demand projections. So I will go back to the first slide. And I think this will probably put a little bit more color, as I said, behind the poll, the first question in our poll. So let's look at the situation current situation, so the actual the actual figures for the primary energy demand fuel mix. These are the figures for 2019. So this is how it is, and then we will look in how it's going, to use a bit of Twitter jargon. So our projections in Wood Mackenzie, so 3 scenarios that we looked into, and what the situation may look like in 2040. So in 2019, as you can see here, hydrocarbons have accounted for 86% of primary energy demand. Of that, 62% was in power. Okay, so now, we look. So it's clear that the world is clearly hugely dependent on hydrocarbons. Now we look at our 3 scenarios. So the first one is energy transition outlook, which is like our base case scenario, and then we have 2 more aggressive transitioning scenarios with the AET2, so accelerated energy transition, aligned with 2-degree scenario. Really, that's the most aggressive one. In which case we will have in 2040 hydrocarbons will account for 60% of primary energy demand and 25% of power. Now, to reach this 2-degree scenario, what we will require is really rapid scaling of electric infrastructure and really early stage technologies that we have currently. And for example, green hydrogen we expect to increase by 4 times in this scenario. Carbon capture and storage capacity we expect to increase by 17 times. And the total investment in this scenario we expect to be in the region of $30 to $40 trillion out to 2050. And then what we also look into is carbon price. For example, in this scenario, we expect carbon price to be over $100 per ton of CO2 equivalent. So a lot of effort, a lot of changes will have to happen for this scenario to really materialize. And with that in mind, with all of this, taking place, hydrocarbons will still account for 60% of primary energy demand. So keep that thought, and now we're going to look into really the drivers and the strategies of energy transition strategies that have been embraced to date by the oil and gas sector. So first, let's look at the drivers. So even before the pandemic, oil and gas companies, really led by the European majors, they were under pressure to account for the impact of climate change on their portfolios. And this came in the form of a number of different pressures on them. So the key pressures that they experienced were government and regulatory pressures. For example, we've just had EU Green Deal recently announced, and over the last couple of weeks, we even had China commit to net zero carbon by 2060, really changing the game completely for many of these scenarios, I would say. And then we've had investor pressures. And to begin with, it was really investor pressures that have pushed the European majors into diversification. And these pressures have intensified hugely over the past year or so, and they really continue to grow. And the reason for this is that financial institutions, so the banks, and as well as insurance companies, are under huge pressure themselves to account for impacts of both physical and transitional risks of climate change on their portfolios. And in turn, they're putting pressures on corporates to do the same, to really do something about carbon footprint, etc. And what's driving this? Who is driving this pressure on financial institutions and insurance companies? Well, it's the financial regulator that's driving this pressure. And the third pressure that we've had really being exerted on corporates is really social pressures. And we've had, before the pandemic, we had grassroots movements such as Extinction Rebellion, and Greta was leading really this movement, and this has not subsided. In many ways, society's awareness of climate change has been further elevated during this pandemic. So this pressure is also growing. So on one side, we have pressures, but on the other side, there's this massive opportunity to invest in the fastest growing sector, which is renewables and other clean technologies. We've had cost of clean energy fall down dramatically. The availability of capital has increased hugely. And really sort of everything is driving. So there's this huge market, new market that's opening up, and huge opportunity that's opening up for many to grow in. But now we look into how companies in the oil and gas sector have navigated the energy transition and what they may look like in about 30 years' time, so in 2050. So on the left-hand side, the three broad buckets they fall under is really situations that we have now. So the three broad buckets that we can put these companies in is diversification. So this is the companies that are investing in clean energies. And this is mainly has been the majors, the European majors that have led this kind of strategy. Then decarbonization. Well, this is really companies reacting to increasing pressures that we have talked about, not necessarily investing in renewables as a new business, not necessarily investing in renewables for growth. But if they are investing in renewables, this is really just to tick the box and to help them decarbonize their operations. Many of them are still in very, very early stages, embryonic stages of actually defining these strategies. The vast majority of them has just committed to reducing carbon footprint, which is, again, sort of under pressures from investors or regulatory pressures from governments, etc. But this is still very much an evolving space. And the third bucket is a very interesting one as well. And this is the market capture area, market capture bucket, if you like. And most NOCs can really, be considered under this umbrella. But most notable ones are the two largest global producers, such as Rosneft and Saudi Aramco. As the lowest cost producers, their quest for a larger share of global market is far from over. So they're really focusing on organic growth and capturing this last barrel, being the last man standing in this game. But this is the situation now. So if we are kind of trying to imagine what these companies are going to, look in 2050, where will they end up? Well, it's difficult to say because there are many ways and many strategies that they can pursue. But what we think may happen is that kind of the companies in the first group are likely to go down the route of becoming integrated energy companies. So this blueprint has already been set out by BP. But even some of the companies in this group may decide that oil and gas will remain core, but they will continue diversifying in other clean energies, so therefore they might kind of join this second group of companies underneath, which is diversified oil and gas bucket. And really, so this is the group of companies where oil and gas will remain core, but they will focus on low cost and low carbon operations. And the final group of companies, which is the niche oil and gas companies, they will be very much, which companies will be in this group will be determined by geography, capital, opportunities, so access to resources, whether they're going to pursue harvest strategies, etc. And we think that kind of the group of companies that is in the market capture now is most likely to end up being in this bucket of niche oil and gas companies. But as you can see, there are so many arrows, there's so many different ways to energy transition. But actually at this point, let's pause here because let's, ask you what you think about oil and gas companies' energy transition strategies. So our second poll today, I don't know if you can see the poll question. Yes, it's here. So the question is, which energy transition strategy should oil and gas companies embrace? Is it diversification into renewables, so become energy companies like BP, Shell? Is it decarbonization, where oil and gas remains core, but must be carbon neutral? Okay, so real focus on decarbonization here and sustainability. Or stick to the knitting, do what you know, oil and gas demand will remain strong. So what are your thoughts? Let's give it a few more seconds. Well, it's interesting. I think we are definitely seeing the first option. Second one is coming up fast. But the first option of diversification into renewables and becoming energy companies, it's a winning option. Well, that is very interesting. That is very interesting. It's a little bit surprising for me, because I would think that the vast majority of the oil and gas companies will actually end up focusing on the decarbonization, which is where oil and gas will remain core, but they will really have to kind of stick to the carbon neutrality. So very interesting. Thank you very much for your views. But certainly, this is something what you say is the right strategy. This is very much what the European majors. It's a handful of companies. It's European majors and plus Repsol may be included in this group. That are pursuing the strategy. But to delve a little bit deeper into the major strategies and what they are doing around diversification. So we have three key areas or three key strategies that they are pursuing. So the first one is Decarbonise. And this is very much where ExxonMobil is. I mean, so ExxonMobil is focusing on its advantaged oil assets, low-cost barrels, and it is investing in carbon sinks. So it's investing in carbon capture and storage. And this is kind of one of the key areas where they see their business thrive. So they would like to stick. They do believe that oil and gas demand will remain strong going forward. Then there's a kind of second strategy that has been very much part of the evolution, if you like, of the European oil and gas majors' strategies. So, for example, where Eni started, so they very much focused on diversification into renewables, but capitalizing on their existing expertise or existing portfolios, or even kind of geographical presence in, for example, North Africa, where they were deploying solar that they used as fuel for their in-field operations instead of gas, and at the same time improving returns from gas production. We've had recently Chevron announcing that they will now deploy something like 500 megawatts of solar and wind within their existing operations, exactly kind of doing what Eni did 4 or 5 years ago. And what this does is it enables each of these companies to actually reduce carbon footprint from their Scope 2 emissions, which is decarbonize operations. But where really the European majors are now heading towards, and I think Shell and Total have pioneered this way. BP has now a little bit kind of leapfrogged them with their sort of very ambitious targets. But Eni and Equinor are also in this group. They're growing across the electricity value chain. So they're focusing on customers and really sort of utility and consumer business. But they're investing in generation, they're investing in battery storage, and they're investing in EV charging. So really, as I say, across the electricity value chain and very much sort of, fine-tuning their new energy strategies. And BP has, as I said, leapfrogged the European majors with their extremely ambitious targets of having 50 gigawatt of power by 2030 and investing significant amount to achieve this goal. But talking about investment, investment so far has been, not that great by the European majors, and I think this has opened the European majors to a lot of criticism, given the amount that they have invested compared to what they've invested in the upstream businesses. So over the last 4 or 5 years, really the main vehicle for growth has been M&A, so that they have grown through acquiring new renewables businesses. The key problem with this is that renewables market is an extremely fragmented market, so finding material opportunities has been really the key issue, key problem for oil and gas majors. But there were other issues such as returns, which we are going to get to in a moment. So as a result, as you can see here, the spend, the overall spend compared to how much they have acquired, even on M&A and on the upstream side, has been very small, average around 4 or 5% of the total spend across the group. But it has been growing, and I think 2020 we expect to be kind of the largest again, sort of in terms of spend for the European majors here. But so that was before, and this is where we are now with all the huge in numbers and figures and with recent announcements and where the spend is going to be over the next few years. So from a very small, less than 5% of total capex, now we are seeing this capex rocketing up, shooting up to 30%. Of 33% or kind of third of capex for BP by 2030, 20% for Total by 2030, 25% for Eni. Sort of huge increases in spend on renewables, sort of clean energy assets for all of these companies. And indeed, kind of this spend is very much going to be needed if very ambitious targets are to be met, and this is again, constantly evolving. BP has set this target, as I said, of 50 megawatts, and Total has also got very ambitious targets now, 25, 30 gigawatts again, sort of by 2025. So this spend is definitely going to be needed, as I said, to hit these very ambitious targets. But what has really prevented the oil and gas majors so far in terms of investing more into renewables, apart from the finding material opportunity reasons that I mentioned before, has been really focused around returns on investment. And the recent collapse in oil prices has obviously had a huge negative impact on returns from oil and gas projects. And in fact, so returns from pre-FID, so these are fields that are yet to be sanctioned, so these are oil fields, this has equalized with single-digit returns from renewable assets. So you can see here the first two blue bars on the left-hand side, they show pre-FID returns at $50 per barrel, they're around 17%. And at $30 per barrel, they fall to around 6-7% IRR. Now, before the COVID crisis, we had an oil price of $60-70 per barrel. I mean, this was over 20% returns that oil and gas companies were expecting to get from these pre-FID projects. And of course, all along, we've had these single-digit returns of between sort of 5 to 8% return from renewable assets. So, really what we heard for quite a few years now from the oil and gas majors that were diversifying into renewables, the key reason that they couldn't allocate more capital was that they would be leaving value on the table, and this was not feasible. This was not what their shareholders would want. But as I said earlier, sort of the oil price collapse has changed things. And what has also changed things is this increasing pressure that we are seeing from the regulators, governments, etc., which is going to see implementation of carbon taxes, carbon pricing, as well as higher cost of capital. And both of these things will really further suppress returns from oil and gas projects. And this kind of environment has really created a very strong case for reallocation of capital from high risk and high carbon fossil fuel projects to low risk and low carbon projects that renewables are characterized with. Now, BP certainly believes in this. So this is on the right-hand side, we're seeing a chart from the recent BP strategy presentation. They do believe that they can get returns exceeding 10%. And this is, again, sort of a very interesting point. I mean, by illustrating this point, BP is saying that they are able, through their operational efficiencies, integration, and of course, project financing, they're able to increase these returns to above 10%. This also kind of maybe answers or even opens a question of what oil and gas companies can bring to the table if they get into renewables, because a lot of people are really wondering still and asking whether oil and gas companies are the right companies to invest in renewables. Why not just let renewable companies develop renewables and oil and gas companies stick to the knitting, the option which you did not like? Clearly BP has tried to illustrate how they can deliver this. But I think as far as investors are concerned, they need to see the proof of it. So the proof will be in eating the pudding. And so execution of this strategy is yet to be seen. So BP is at the forefront now. It's leading this, and all eyes are on this execution. We haven't had that many companies in the sector do this. Ørsted is really the only oil and gas company that has made this full transition from an oil and gas utility company into renewables company, and they did it, probably in a similar way to what BP is doing, but they had a lot of different other factors, such as very strict Danish environment, as well as single shareholder, which was the Danish government, that very much helped this transition. So the time will tell for sure whether this is a successful strategy or not. But BP is certainly convinced that they can deliver results. And now this is actually my last slide in terms of content. I would like to just reflect on the rest of the oil and gas sector, because much of the story of the energy transition has been, it has been around the majors, European majors that have led the energy transition, and the vast majority of other companies are still really struggling to find their way to understand what is the ask of, what do they need to do to create this a successful and sustainable upstream strategy. Well, there are two things here that each company really needs to focus hard to create a sustainable and successful upstream strategy. And the first one is resilience. So the resilience is all about really positioning to the lower end of the cost curve, being ready to be sustained in low oil prices, low oil and gas prices. And this is both a near-term requirement, but also long-term requirement. So just making sure that you have a very strong, resilient portfolio that can sustain a very, negative kind of environment, oil and gas price environment. But at the heart of it, at the heart of this strategy, is decarbonization. So it's decarbonization is what will make this strategy very, very sustainable in the long term. And it will absolutely ensure, this kind of strategy will ensure that companies remain investable through the energy transition. It will also ensure that they have social license to operate. It will ensure that they continue to attract talent, because young people, it's no longer popular to work for oil and gas companies. So they really want to see that companies are doing something about decarbonization, that are taking responsibility for carbon footprint, and that they're doing something about it. So this is really kind of very much ensuring long-term success for the shareholders, long-term success also for other stakeholders, including the environment, including employees. So this is absolutely essential part of the strategy. And then, key takeaways. This is my last slide. Just to sum it up very quickly, the pandemic has accelerated the global energy transition. There's no question about it. I think we have seen this with the Euro majors absolutely increasing their commitment to carbon reduction, and increasingly also diverging from the US majors. And also other companies are increasing their carbon reduction commitments. Investment in clean energy is also increasing, and it's certainly clear that risk-adjusted returns for renewables are looking now much more competitive. And finally, just to reiterate the point that sustainability and resilience are really key ingredients for a successful upstream strategy. And maybe one last point I would like to mention, if you would like to learn more about this, in Wood Mackenzie we are developing a corporate new energy series which looks into the European majors, including Repsol, their detail behind their new energy portfolios, and it also includes some of the benchmarking studies for key technologies that these companies are focusing on, and that are really going to be key to deliver a net zero carbon strategy for the EU and UK, as well as China, such as offshore wind, solar, CCUS, and hydrogen. So if you have any desire to explore more, there are links attached to this slide as well, so please do, or you can contact me directly. So thank you very much, and I think with this I'm going to hand back to Yevnika.
Valentina, thank you very much. I've been just looking through the chat and can see a lot of requests already for the presentation and the recording, and saying how interesting was the presentation. So thanks for this content, and we have a lot of questions. So and more than 200 people joined us today. So obviously this is the hot topic for everyone. Those who believe in energy transition and maybe somebody who doesn't, it still affects everyone. And before we move to the questions, I just wanted to ask a couple of the questions of your last slide, the takeaways from the whole presentation. So one of those, how different the European and USA companies' strategies are. So why are European and USA companies having such different strategies when it comes to renewables? What is wrong and what is right in your opinion?
Well, that's a very very good question. I think the title of the talk is "Leaders and the Laggards." But there's really no one can say whether laggards are going to be winners or losers. Mm-hmm. Strategy. So it's very difficult. I mean, we haven't had, as I said earlier, execution is really key. But to answer your question, in terms of why there's such a difference in strategies, it's really going back to my first slide or second slide that talks about pressures. It is under these pressures that European majors have started diversification into renewables. That kind of the right-hand side, the opportunity hasn't quite been there. Maybe it's still not there quite, but the pressures were there. The pressures continue. and the pressures continue to this day, and they're intensifying, right? And at the same time, now opportunities are opening up. So we have the kind of the system is kind of drawing, and it's really making it more compelling and much more interesting and exciting to invest in renewables. But you know, the pressures that have been responsible for pushing the European majors into renewables are really largely absent from the United States and from the US companies. It's simply not there. Recently, we have seen more investor pressure being put on the US companies, and this investor pressure, for the reasons that I explained, because investors or financial institutions are under pressure themselves. So if these financial institutions are telling now everyone, US companies, NOCs, everyone, it's like, well, look, you really have to do something, because we need to make sure, if you want to stay in our portfolio, you know, or if you want us to lend you money, you have to do something about it. So, and this is why a lot more companies are now trying to do something around decarbonization.
Yeah, there have recently been several announcements with big major banks who are saying they don't invest anymore into pure oil and gas projects. So, but in this case, where will the capital come for oil and gas projects? You know, do you have any vision on that? Because
yeah, well, that's a very interesting one. I think the kind of mainstream capital is certainly under pressure, as I said. So, you know, the mainstream capital is asking the corporates to do something. But if corporates don't want to do anything about it, or are not willing, or maybe they're not in jurisdictions that are likely to impose carbon tax prices and taxing, what their options are is to turn to private equity and private capital. So as long as they're profitable. So profitability, so cash flows will be key. As long as they can also kind of sustain their own operations, or kind of can find private capital and private equity to invest in them, then that's that they're going to find their way forward. We have other industries that are not, are not considered very popular, not quite kind of moral money. So we have tobacco, we have weapons. People still invest in these companies. So capital will find its way into oil and gas as long as resilience, part of the strategy, is working well. However, it's not going to be without problems, because you need to think about kind of the talent that you can attract, what kind of, how many people want to work for companies that are not really sort of on the right side of kind of societal reforms, etc. So so it will have to be a balance. But for sure, if there are returns to be made, capital will find its way towards the returns.
That's how it works. That's how it works so far. Okay, let's look at the chat. And it's quite a lot of questions, as I said. So we'll see how many we can answer now. And then if we wouldn't have enough time, we will pass definitely the questions to Valentina. And as well, there will be her contact details in the email, which we will send tomorrow. Okay, Gianluca Lufinas saying, Total seems the most advanced company when we look at the strategy diversification into renewables. The key question would it be, in my mind, if operators are ready to become service providers as opposite to final clients?
So Total is as a European.
According to Gianluca, yeah, he thinks that Total seems the most advanced company when it comes to renewables. But do you think that operators are ready to become the service providers rather than just the final client?
The operators are. I actually I'm not understanding. Operators are ready to become
service providers as opposite to final clients.
I don't think I maybe quite understand the question. Maybe Gianluca, if you can just
okay, we can ask Gianluca if you can clarify the question. we'll just move to another one.
Come onto the stage, Gianluca.
Yeah, that's another way to clarify. Do you expect any kind of consolidation around the large energy players, mixing oil and gas and utilities players? There was another question in the same ways, like do you believe that utilities and companies will welcome oil and gas into the renewable, so it's rather rough competition?
Yeah, well, they're certainly getting into their space. I mean, but there's one area where kind of oil and gas companies are not quite keen to get into. It's any regulated part of the value chain. So they don't want to go down into transmission part of the value chain at all. So this is kind of, they're really targeting niche areas along this value chain, but for sure, yeah, they are becoming a competition for utilities at the customer end of the operations.
Okay, actually, yeah, Gianluca wants to join us. Let's see if he can.
Hello.
Not at the moment, nothing happened. So let's move for now to the next question. Harriet asks, very interesting presentation. How fragile are decarbonization strategies? How much are they rely on CCS, or how are they mitigating risks to this?
How fragile are decarbonization strategies? You know, there are strategies that have been set to 2050, with some of them have got sort of now shorter term goals, but it's really you know, execution. We have not seen yet kind of execution of these strategies in earnest for any of the companies. So the question is, you know, and to my mind, when I ask myself, these pressures are just going to continue. Okay, so I think in areas, in geographical areas such as in the EU, UK, you know, the pressures to decarbonize and to diversify are just going to increase, and they're going to continue. So these companies have no choice but to go down this route. So, you know, I don't see any reversal if this is the kind of intentional. I don't see any reversal happening on these strategies. There's what we have seen over the last 4 or 5 years. There's been just more depth and breadth added to the direction of decarbonization, and this is simply the direction of travel. How much do they rely? Will they rely on CCUS? What was the second part of the question? Is the CCUS? Yeah, I mean,
how they are mitigating the risks to this?
So yeah, CCUS is an integral part of each one of the major strategies. So it's still at very embryonic stages, but there is certainly sort of this help and push at the governmental level now to invest and to develop these technologies, because it's now the governments and the whole regions that actually depend on the execution and delivery of their net zero carbon, based on these kind of new technologies, embryonic technologies that will have to be scaled up, that they will have to invest more. So, you know, the majors are certainly sort of looking into this very seriously, and they're investing. They're already investing in scaling up of these technologies. And the idea is to scale them up, bring costs down, and enable sort of, you know, the further uptake like we've had with solar and storage, etc.
Okay, there was a couple of questions as well asking. Just let me find those. But I'm trying to kind of combine several questions together. Before that, is one of the questions was, what is your view on the BP vision of reaching that 10% IRR? So I guess, do you believe, how realistic is that? Because it's very ambitious, obviously.
Yeah, well, it's difficult to say. It's very difficult to say. The proof will be in the pudding. But I just I do admire kind of the boldness of BP's strategy and the leadership, and I think again it has galvanized as well. So support within BP, for this execution. So it's again sort of looking at all stakeholders, not just kind of the kind of pure returns, but it kind of really begs this kind of question whether oil and gas companies, as I said, should be diversifying into renewables and what they bring to the table. And when I think of oil, I joined oil and gas industry many years ago as an engineer, and what always fascinated me about the oil and gas industry was this ability to deal with extremely complex projects. I mean, drilling high pressure, high temperature wells, dealing with projects like Kashagan in Taro gas, and it's like hugely technologically complex projects. So in many ways, moving into renewables is not as complex at all. I mean, it's from that side, they're not going to even need all this technological expertise. So there's no question they can deliver on the technological side. But I think where oil and gas companies can deliver is while the technologies on the renewable side are not complex, is the systems within which they operate that are really complex, and this is really where the majors can bring their skills and competencies to create competitive advantage in a highly competitive market like renewables market. And as BP has said, so it's kind of really operational and project management expertise, and combined with the ability to integrate renewable systems with their gas and trading segments, that could give them this competitive advantage. So I can completely see that the theory behind it, but we still need to see kind of the results. And let's not forget balance sheets. Let's not forget balance sheets, and of course the geographical spread and relationships that the majors have in dozens and dozens of countries operating around the world. Strong relationships with the governments, infrastructure in place. So huge competitive advantages that majors do have, and could see these above 10+% returns delivered.
That's exactly the couple of questions about Africa and what do you think it will be the impact on African countries shifting on the energy sector, and do you think it needs to be different for those of Europe, like we were saying, this comparing USA and European countries?
Yeah, that's a very, very good question. I get asked this question a lot. So obviously it's going to be different, and I think one thing that I've heard from a lot of African NOCs, especially, that they don't feel happy about this energy transition evangelism, because they feel that it will prevent them from exploiting their oil and gas resources, which Europe and America and others have exploited over the last 100 years, and they will not get the same chance of doing it. I don't see it that way. I can see why they feel hard done by, but the way that I see both hydrocarbons, especially gas, and renewables playing a very, very important role in Africa. I mean, in Africa, you still have 600 million people that require access to electricity. So which technologies are going to fill this gap? Well, there's space for all of them. There's space for renewables, there's space for oil and gas. So I think, African countries, they certainly should not be disadvantaged. But I feel that actually the majors that are extremely active on the oil and gas side in Africa, they really have an opportunity to act as ambassadors of the energy transition in Africa, which I'm sure many of them are doing already. are engaged in many projects.
We have Gianluca here. Hello, Gianluca. If you can.
Good afternoon. Apologies for these internet problems.
No problem.
But, a very interesting presentation. Thank you very much.
Thank you. Thank you.
And thank you for giving me the opportunity to clarify my question.
Thank you.
The reason why I said that Total is most advanced, because Total started doing some acquisitions in some different space, like battery companies, already several years ago.
Yeah.
At the time, I was looking at these acquisitions with a big question mark, because they seemed very odd for an oil and gas company. When we look at Total strategy nowadays, it all sort of makes sense, because through the battery acquisition, you can get a full value chain from energy provided from renewables, the buffer in between, and the end user. So that's why it seemed like Total started planning this transition already before the others.
Yeah.
The second part of the question is that taking away Shell, which has always been a very technically driven operator, all the other operators, they were looking at markets from a product perspective. How much the petrol cost, what kind of petrochemical products, these kind of things. Become an energy integrated company, you need to provide a service to a client, meaning you need to provide a solution to the client, a solution that fits either an industrial requirement, a household requirement, something. It's not only the energy, the product, but also how you deliver it, which basically means that operators will have to change the business model and being ready to listen to other parties, understand the needs, and provide a technical solution. Something that operators normally were not very well equipped with.
Okay.
That's why I said operators, if they want to embrace the full energy transition, they need to shift from being used to have people knocking at the doors and having their own representative knocking at somebody else's door with an open mind to understand the other side issues, provide a solution. An example is Total providing quite an amount of power to Singapore LNG terminal in order to support the decarbonization of that facility.
Yeah.
So how are operators willing and ready to embrace not only the operational change from an energy transition, but also the internal organizational changes?
Okay, well, thank you. This very much.
Thank you, Gianluca.
Thank you very much. Yes, to reflect on Total, I would agree with you, Gianluca, and I think that one of the slides where I showed the investment that Total has made over the last 5 years really sort of eclipses investment by other majors, especially on the M&A side. They have invested something like 6 billion, and the next biggest investor was Shell with 2.5 billion over the last 5 years. And yes, and even sort of they have acquired actually SunPower back in 2011. So this is way before Paris Climate Agreement. They have acquired SunPower in the United States, the kind of the biggest solar manufacturer. So at that time, though, I mean, they didn't have the same mindset. They didn't have the same strategic direction that they have now. At that time, it was part of their hedging strategy, looking into the future while solar is getting quite popular. So that was their kind of, part of their long-term hedging strategy. But it's really, after the Paris Climate Agreement 2015, December 2015, that they have in earnest started looking into diversification. And you can see if you go back sort of 4 or 5 years, every year there's a little addition to their strategy, sort of new energy strategy. So it's definitely a slow evolution of where they were, from where they were 4 years ago to where they are now, and now really sort of strongly going towards investment across the electricity value chain and integration of this business. Now, looking into the change of their business model, absolutely right. I mean, they will have to. They are shifting their business model already, and this focus is very much on the kind of the customer and you know. But it's not going to be like traditional utility. None of them want to be even compared to traditional utility. What they want to be is a new kind of sort of customer service. And it's going to be through mobility, providing electricity, providing internet, all sorts of different areas that they can service their customers with. So it's and it's something, again, sort of evolution of the utility model, the next generation utility 4.0 or 5.0, I would say.
Okay, sorry, Gianluca, I had to switch off your sound because there was some sound issues, but thank you for your question. I will, Gianluca represents, by the way, Worley. He's a senior vice president in the Worley company and our regular attendee, so it was nice to hear him. I will let him go for now. Thank you, Gianluca. And there are a couple of questions here more. One, I think it's an interesting one. What, Valentin, do you believe? Do you see the possibility of completely new entrants to disrupt the transition of the majors to the new business model of the energy transition? For example, Tesla might be an example, which already has battery storage projects and a generation license in the UK. So.
Yeah, that's a really interesting question. Absolutely. Disruptors will be disrupted. We cannot. We are so bad actually at predicting even new technologies that if you look back only 5 years ago, we are 20 years out on predicting where storage is in terms of costs and. The kind of, whether the same thing was with solar and wind, etc. So we are really not very good at predicting, but it's also normal. It's unknowns are very difficult to predict. But what we do know is that there's now sort of this, trillions of dollars worth of investment is now being pushed towards a new research and new technologies. So there's no question that new technologies and new companies will continue to disrupt the space. And really, who knows what is going to deliver and which technology is going to deliver this kind of net zero by 2050. When I think back to iPhone, it was invented 12 years ago when it's as old as my children, but it's who knew about iPhone 12 years ago, before 12 years ago. I mean, it's quite an amazing evolution.
Definitely, that things change quickly nowadays, that's for sure. Well, I think we are almost done here. Our time is over. We have just a couple of minutes to finish, and just want to say one more time, I have a lot of the compliments in the chat for the presentation and requests for tomorrow. Let me remind that tomorrow you will receive the recording of the presentation and the link to the report that Wood Mackenzie provides with more information. And of course, I'm sure you can contact Valentina directly about your questions, or if you need more expertise on this matter. And of course, you will see Valentina at our future events. Wood Mackenzie is our partner for our conference in January and for other initiatives we have. And I just want to say, Valentina, thanks a lot, and thank you to everyone who asked a lot of questions. Sorry if we didn't answer all the questions. It's not enough time, but we'll definitely continue this conversation. As I said, we planned talks, virtual talks, Go Net Zero virtual talks. The next event will happen on 5th of November, and we want to do it in a different way, kind of a debate, pro and cons on the hydrogen. So how much of hydrogen? That's quite as well the topic. There's a lot of questions and a lot of potential on the other hand. And then on 25th of November, we will speak with Carbon Track, actually, who believes that there is no future for oil and gas at all in the very nearest. So that's their position. So they want to have a debate with the other side who actually see that oil and gas as we see it now, exploration and production and downstream has a long-term future. So I think it will be interesting, and we have now look at our website. We have planned it till the end of the year with more announcements. And just thanks a lot, Valentina, and thank to all our attendees.
Thank you. Thank you very much.
Thanks. Bye.
Bye.